Okay, so in this video, we will be discussing the government non-bank financial institutions that we have, just an overview, and then we'll be having separate videos for each of them. So we have four, GSIS, SSS, PhilHealth, and PHIC or HDMF, all right? So an overview for each of these, we have GSIS, Government Service Insurance System. So this is for government employees. So as long as you are employed in a government agency, regardless of status, regular or contractual, so you are required to contribute to the GSIS fund, all right? So the employer and the employee would have to contribute a certain amount. So for employee, I think it's 9%, and then for the employer, it's 12% of their income, all right? Well, we'll be discussing more details on that. But basically, you're contributing for your retirement fund or your pension benefits, all right? When you retire, normally it's the average age of retirement is 60. So when you reach the age of 60, you can retire from the service, you can stop working, and then you can receive the retirement benefits either in lump sum, or I think there is a lump sum amount. And then there's also the monthly pension amount that you're going to receive for, the rest of your life after retirement, as long as you are living, all right? And then aside from that, the GSIS provides other benefits for their members. They can avail salary loans or some sort of loan, educational loans. They also have that. But of course, since these are loans, it's just a service, a way for the members to have a source of financing or a source to get their money from for their emergency needs or immediate needs. So in a way, this provides a service to the members to help them in case of financial needs. And then on the part of the GSIS, so it's one of the ways that they could earn money. You lend the money, and then of course there's interest. So that's one way that they are earning money. And then of course the main reason or the main source of their income would be the investments, all right? So the SSS is a retirement fund being contributed into by the government employee. So it's a nationwide thing, so it's mandated by law. So it's operating on a very large scale, and it does involve some sort of public funds, because majority of the Filipinos are contributing to it all over the country. And then so in a way, the reason why we're discussing this is that there's a possibility that in the future you may or may not be employed in a government agency, or you might be employed in a private company, in which case you'll be concerned with SSS rather than GSIS. And then the other two government agencies, PhilHealth and PAG-IBIG, that's also mandated, regardless of whether you're a government employee or a private company employee. All right, so we have, this is just an overview, all right? So we have the GSIS. On the part of privately employed individuals employed by private companies, and also self-employed individuals, if they want to prepare for their retirement, they want to get pensions as well when they reach the age of retirement, then they can also contribute to SSS, Social Security System. So this is for the private employees, all right, in that sector. A little bit of comparison between GSIS and SSS, aside from the obvious, GSIS for government employees, SSS for private employees, is that GSIS, the rate is much higher. The total is 21%, 9 from the employee, 12 from the employer. With regards to SSS, the total is only, I think currently it's 12%, 4% from the employee, and then 8% from the employer. So with regards to retirement benefits, pension amount, GSIS retirees are receiving much higher amount compared to the SSS retirees, all right? And then SSS, aside from the retirement or the pension, they are other services that they provide to their members. There's disability. If your workplace has caused you to be disabled, so you'd be able to apply for that. And then you have sickness benefits when you contract a disease or got sick, and then you get confined from the hospital. Aside from the PhilHealth benefits, you might also claim SSS, sickness benefits, and then of course we have maternity benefits, and then loans as well. Alright, so there are different types of loans available from SSS, could be availed by the employee or the employer, alright, for personal loans or for business loans, alright. So those are just some of the benefits provided by these institutions, the most common and what's commonly known to the public, alright. Alright, thirdly, we have PhilHealth. So this is a health insurance, alright. Again, if you're employed in the government or in private companies, it's mandatory. And then for self-employed, so it's voluntary for them. And in the case of PhilHealth, technically you receive nothing unless you get sick, you get confined to the hospital, and then you needed to claim the benefits. It's a health insurance, alright? So if you're, a young professional, normally that's how they earn their revenue, because majority of, the young ones, they're healthy and they're not usually they don't usually get sick, alright. So me, for example, I've been working for 6-7 years, but I haven't gotten sick to the point of being sent to the hospital and claiming any benefit from PhilHealth. So as of this moment, nothing yet. But of course, to certain individuals, health is what do you call this? There are instances that people do get sick for unexpected reasons, regardless of age. So it's possible that there are also young professionals who get sick and then they needed to go into the hospital for checkup, and then they get confined to be checked. So it's the PhilHealth. They provide certain limits on how much of the hospital bill would be covered by the insurance. Alright, so let's say you get sent to the hospital, you're sick, you're diagnosed, and of course there are, doctor's fees, room fees, others. So the PhilHealth would be covering some, if not all, of the hospital fees, alright, that you essentially have to pay, alright. But they have certain list of what types of illness are covered. There are certain things that are not yet covered by them. So let's say, for example, dialysis, that one is covered, but they have a limit on how much for a session, and then how many times per week it will be covered by them. In excess of the allowed limit, then you have to cover personally. Alright, so those are, and then there are types of surgeries that they cover, but other types they don't have yet. Okay, and then of course because of the Universal Healthcare Act, so they're also providing health insurance to basically every Filipino. Okay, contributing or non-contributing. So the indigents, they are not contributing, but they are members of PhilHealth. Those that are registered with 4Ps and other social welfare programs of the DSWD or any government unit, actually, LGUs. So basically every Filipino is a member of PhilHealth essentially, but the contributing members are majority the employed ones, government employees, private employees, and then of course the voluntary paying members. Alright, Of course, those non-contributing members, there are certain requirements, prerequisites before they are to be registered as members of the PhilHealth, and for them to claim or avail of the services provided by PhilHealth. So it's not a simple matter of you just want to. Okay, so there are certain conditions, like income limit, or your ability to work, or the number of people you're supporting, things like that. Okay, and then the last one is Pag-ibig, or HDMF, Home Development Mutual Fund. So this is more like a savings program. It's mandatory, again, for all employed individuals, government and private, and then of course we have the voluntary sector for the self-employed. It's savings. I think the main point of the law that created HDMF is actually to encourage the Filipinos to save. Because I think when it was enacted, there are still a lot of Filipinos who don't have bank accounts, who don't have bank savings. So they created HDMFs to encourage the Filipinos to save. And in a way, it's managed by a government agency. All right. And then when the fund, they call it the Provident Fund, matures, I think the earliest is 20 years, or by the time you reach the retirement age. All right, so even if let's say you started contributing to the fund or savings to the fund at the age of 55, when you turn 60, then you'd be able to get all your contributions as well as the dividends earned by your contributions. Okay, so it's some sort of more of an investment. Okay, the money that you contribute to the fund, they are investing it, and then the earnings, of course, you get a share in the form of dividends, and then the dividends get credited to your account. All right, so that's for HDMF. And then of course they're more commonly known as home development, okay, from their name. All right, so one of the main services that they provide is the housing loan. Another objective of theirs is to help the Filipinos to own their own home, their own houses, residences, by providing the housing loan. Okay, so it's either let's say a developer or a seller of the land would allow the payment of the house and lot, or house or the lot alone, to have the purchase financed by HDMF or Pag-ibig. All right, they call it Pag-ibig. I forgot the. Wait, let me check. It's an acronym for something. Pagtutulungan. Pagtutulungan sa kinabukasan. Yung pag, that is the meaning of it. Pagtutulungan sa kinabukasan. And then yung ibig, it stands for ikaw, bangko, industriya, at gobyerno. Alright? So that's the meaning of Pag-ibig. Okay. So again, the main point is, of course, housing loan. They do offer lower rate compared to banks in that regard. And then aside from that, they also provide other types of loans, so personal loans, multipurpose loans, and calamity loans. Okay. And then they also have this other program, MP2, if you want to save more or to invest more of your money into the fund, so you can technically increase it. Instead of increasing your contribution, you just put it in their other program, which is the MP2. Okay, and then so I think that's the main points of this government non-bank financial institutions. Okay, and how would we relate it to banking and financial institutions? So technically, these are financial institutions in the form of they do they are involved in savings, investment, provision of retirement or pension funds, and then of course insurance. So in a way, they are really operating as financial institutions, all right? But all these four